So a prime example of I think the nefarious activities that the Wall Street banks do is in affordable housing, in the Dalles, which is in our Columbia we share with you, a small town, maybe the size of Bellingham. I would have to check, but U.S. Bank, Bank of America, Chase, and Wells Fargo have all said, you are too small of a community for us to lend on commercial projects right now. Done. And there's one project, it's for 94 units of affordable housing in the Dalles. There's a 2-year wait list for the project. The loan to value is 30%, so you think about, when did you get your last home mortgage? Did you have 70% to put down on that? The bank would have been, hey, yeah, let's do the deal. Here's the deal, it's 30%, so 70% down, and a 2-year wait list of people wanting to live in it, and 70% of all the rents for that unit come from the federal government in terms of subsidy. What's the risk? What's the risk? U.S. Bank, Bank of America, Chase, Wells Fargo said town's too small. There aren't similar projects to make a comparable analysis of. Excuse me? Ben Bernanke 2 weeks ago, he's the chairman of the Federal Reserve, was talking to the independent community bankers of America, saying this exact thing, that the Wall Street banks have created an automated system, so back to your FICO scores, where they can sit 1,000, 2,000, 3,000 miles away and say, what do the numbers look like? Oh, okay, well, show me 2 other projects that are within 5 miles, and then we'll do the deal. Because they don't know the community, and they've built this, what they call an efficient model, that takes the I love credit people who've had a lot of credit and are trapped in that cycle but haven't gone under. And then as long as they have a whole bunch of assets too, we'll give them loans, instead of thinking like, are you a viable member of our community? Does this project make sense? Is it beneficial to the health of our community? Then we'll do the project. So it's a different model, and I go back to Ben Bernanke because he was explaining that the strength of our community banks especially is the relational model. They're not going out and saying, who's got the lowest credit score and let's make a loan to them. They're saying, let's take the whole picture into account. The credit score model is not necessarily the best model of health. And I think we can all probably come up with examples of people we know or situations we've seen. So let's take the whole picture into account. What's the community support for this project? Do we know them? Are they respected? So that's really where the strength comes in. But yet there are limitations for our smaller institutions. Business Bank, $85 million bank is fairly small, so they would be capped at doing that same exact affordable housing project in the Dalles. My guess is they would not be able to do a $3 million loan. So they would need to find a partner for that. Now in the past it was a little easy. There used to be some gentleman handshakes where Bank of America would say, yeah, we'll do the deal, we'll look at it, make sure it's good, but you just run with it, you get all the credit, you'll get all of that. But now what we're seeing, when I talk to bank executives, and I'm always open to hearing if this is accurate here or different, but the big banks are saying, yeah, we'll partner with you, but we want a personal relationship with that client. Then all of a sudden the client's getting sold, why don't you move your accounts over here? Why don't we take your home loan? Why don't we refinance this when the note needs to be refinanced? And the community banks are losing viable business loans because they were trying to do the right thing by partnering with somebody else to get the deal done. So it's for the reason of the farmers not having been at the mercy of out-of-state banks, the affordable housing groups that can't get their affordable housing projects built when it's the least risky project we've ever seen in terms of that area. The community banks looking for partners to get things done. That's really the basis of a state bank movement. It's a non-retail. You and I unfortunately wouldn't be able to go bank with a state bank, but the banks would be able to, where the credit unions get their servicing, correspondent servicing from a state bank. One other, the question I thought was a very good question of how many loans do you all keep in your bank or credit union? That's an excellent question. It's a double-edged sword though. We have, who can remember the 80s, certainly not me, I wasn't buying houses at the time, when interest rates were in the teens. The secondary market has helped pressure pricing down with this great goal of spreading risk. But then the Wall Street banks figured out how to play the game and get rid of risk. So that it's all on us, the too big to fail, the socialized insurance policy for the big banks. Unfortunately, as I think you pointed out, Community banks can't take a short-term deposit, 1-year CD or 5-year CD even, and then make a 30-year loan and manage all of their risk. Because the smaller they are, the more wobbly they are in terms of market fluctuation. So it's really hard to make those 30-year mortgage loans. But they want to serve their customers, so they make them and sell them. Same with credit unions that usually tend to do only second mortgages. It was nice to see that there's some first mortgages going on here and being held. A state bank, though, can retain those. And especially the FHA, the Federal Housing Administration loans, the VA, the Veterans Affairs loans, and the SBA, the Small Business Administration loans that are government guaranteed loans that most often have to be sold outside of our state. Those are very, very low risk loans because they're government guaranteed, but we have this market the big banks have shaped such that the local institutions can't really afford to keep those, tend to be lower rates of return, tend to be longer loans. They can't keep them, so they have to sell them. Wouldn't it be nice if we, the taxpayers, were able to keep those loans circulating in our community and generating that slow and steady rate of return so that we weren't having to invest in other places? The real estate portfolio of the state of Oregon is 99% of all real estate in our investment council portfolios outside of the state. Aren't there any viable loans in Oregon? You'd think there were, but when we give our management to Credit Suisse, they don't know Oregon, just like Minneapolis decision makers don't know Whatcom County. They're going to go, I can do that, or I can invest in a high-rise in Singapore. Singapore, right? So this localizing brings the local decision makers to the table where they can say this makes sense, and that's where you can put deals together. But we need a backstop so that when they are up against their limits of how big of a project they can do, or say if you've done too many development loans, you don't want to do all development loans, so you want to be able to balance that out. A state bank helps balance that. So I'm hopeful that the coalition that's now forming in Washington around the loose concept of a state bank can be tightened up so that your treasurer can see some of the practical implications of keeping money local and begin to build that coalition with community banks and credit unions as we've done in Oregon. And our legislation's up for our first Senate vote tomorrow, which we're confident is going to be pretty favorable. Committee vote, which will then go to another committee. But we have a bunch of momentum in that. But we're starting with something really, really small, a first step that pulls together a bunch of resources to support our communities. And I would hope that we all can think, as we're moving our money, how can we not only move our money, we can move our borrowing, and as we create that demand for our local institutions, that they're going, we need help too to make sure we can manage the growth of absorbing our deposits and serving our lending needs. And that's where the partnership model can come in. The second side is there, as much as we can move all the money in the world into our community banks and credit unions, there are still projects that are good projects, but they're not quite creditworthy. And banks and credit unions would get slapped really hard if they make certain types of loans that do make sense. They are good loans, maybe without a track record, maybe it's a new type of industry, maybe it's a first-time family farmer, which is not the highest credit quality out there, but those are viable. We were just down at your farmer's market, sorry to jump back and forth, and it's beautiful. The infrastructure you have here and all the farmers you have, and that's a critical role, but what financial tools do we have to support the family farmer? In Oregon, there are none. The federal programs don't help. Community banks are hamstrung on this side. The credit unions can't do it for this reason. The regional banks don't really understand. You've got what? You grow 5 different things. You're not a wheat farmer with one thing. I don't understand that business model. Show me the data. How can we make that much money per acre? We're used to people making a lot less, so we can't trust your numbers. So we're not going to give you. We've got no program for those make sense type of deals. That's the economic development side, and it's really important to separate the two. We're not creating state banks to then go, who do we want to lend to? Oh, I like you. Let's do a loan. Let's look at addressing the system of our community lending institutions, shore up what they need. That's the market rate, average to below average risk, the federally guaranteed loans that we're leaking out of our community as fast as possible. That's the market side. The other side is the economic development tools that Washington has plenty of. The Treasurer's Office manages a bunch. How can we coordinate those more through community banks, through credit unions, so that you all who know the real people here can flip that switch on and get that loan guarantee right there. Or get that interest rate buy down to that customer who maybe is a family farmer that's getting going, but for the first few years they can't make their full payments. You create these tools to solve those needs. Does kind of makes sense. You got two sides of things that you start to bring together. What are the economic priorities of our state? How can we coordinate those resources that are already there through the private institutions and cooperative institutions that are doing the real work, that are really serving our communities, and how can we make it work even better? Keeping more money local, keeping more businesses maintaining employment, and getting more businesses to expand and grow. So that's really the essence of the energy behind the Move Your Money campaign and the state bank campaign, and I guess squishing those down in a very fast narrative of why they're together. I'd be happy to probably take questions after, I think. How are we doing on time? Do you want to do?